Right now, right now. 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 Oh, I got a real good feeling.
We try to bring you high-quality educational and informational content every single day. Why do you think the price is having such an anemic time? The news story of the hour. Jump onto the chart. Is this the beginning of a massive financial unraveling? We got to add a little addendum to the show map today. So we start here on the daily. Now, we've been looking at the RSI on Bitcoin's daily chart for the last several days. It always has been, but it's been increasing over the last 50 years since the government has been bigger. Hey guys, what's going on? Jeb here, and welcome back to Coffee and Crypto Live and to our studio. In today's episode, we're going to be talking about CPI, the Consumer Price Index, because as you are well aware by now, we have seen a rise on CPI. Last month, which was July to July's data, we saw CPI sitting at 3.2%. This morning at 8:30, the report came out, and we are currently sitting at 3.7%. If you've watched the last 2 months of content, you knew this was coming because I've been talking about how gasoline prices inverting were going to cause a major uptick in in CPI starting here in the month of September, especially moving on into October. That's right. This is not over. CPI is going to continue to increase over the next month, if not over the next 2 months. And we're going to be analyzing today the impacts that may have on the Bitcoin and the cryptocurrency market and the impact that may have on Chairman Jerome Powell, the chairman of the Federal Reserve and the Federal Open Market Committee, and his decisions about where we will be taking interest rates over the course of the next 6 to 12 months. Welcome to the Crypto Jeb YouTube channel. My name is Jeb McAfee. Thank you so very much for joining us. Today, we're also going to be talking a little bit about Coinbase because Coinbase, after much speculation, has decided to integrate Lightning Network into their company. Very exciting news for Bitcoin and cryptocurrency adoption and the adoption of Lightning Network. This is one of the most bullish stories that Lightning Network has ever been given. And so we're going to talk about all of that and more in today's episode of Coffee and Crypto Live. Thank you so very much for tuning in. Let's go ahead and read chat. Joe Bollier is in chat, said good morning, Jeb. Alex Nybo is in chat, said good morning. Dan Nolan in chat said good morning. BTC Crypto Alerts. CM93, Philly Skills 1428, Satchet 321 is in chat. JS Sifu Lee said good morning, God bless. Good morning to you. Bonacasta Home said good morning all. Ninja Glock in chat. Schmedley B, what's up Schmedley? Good to see you. XOOOX said what's good? Was good. Robert Kehoe said right now. Good morning, Jeb. Good morning to you, Robert. Reformed is in chat. Tom M, Mr. Dip, Rave Song Records said, welcome back to your studio. And it is nice to be back. I love this studio so much. I love it so much. BNBTC Crypto Alert said, Shiba Inu, 89% holders at loss. Whew, man, it's almost like you have to be careful with cryptocurrencies that don't have much intrinsic value. Wow. All right, Valerie Valenzuela is in chat, said good morning, Jeb. And Cool Crazy Techie Dudes in chat, and Sean O'Brien again. Good to see you guys. Good morning. Let's dive right on into it. As you can see, CPI has come back at 3.7%, and this is something that we saw coming a country mile away. That's how we said it growing up. A country mile we saw this coming because, let me just pull this up. Gasoline prices in the United States of America. Let's go to Y Charts. Might have a good chart here. I think I want to look at, the U.S. Energy Information Administration. They have a good chart on this here. This is the United States Energy Information Administration. You can see the monthly prices of gasoline over the last, let's say, 30-odd years here. You can see there was a major spike up to an all-time high for the United States where average gasoline prices peaked at roughly $5 a gallon. Over the last several months, we've been seeing major deflation on the CPI component, the component of CPI having to do with gasoline prices as a result of the year-over-year change in this. For example, when April's CPI report came out, we were looking at March to March's data because each report looks at the last month and then the 12 months before that. So this April, we saw March to March come out, for example. Well, March to March of 2022, gas was sitting at $4.32. March of 2023 was sitting at $3.53. So we obviously saw about 20% deflation there. Well, something changed relatively recently because in July we were seeing June to June's data. Well, June was the peak, so we saw the largest amount of deflation in the gasoline component of CPI to date, because we went from $5 in June of 2022 down to $3.68 in June of 2023. Well, if you move forward, the margin narrows and begins to flip. July to July was $4.66. July of 2023 was $3.71, and then we get to this month's print, which is looking at August to August's data. Last August, gasoline was sitting on the national average at $4.08. This year, it's sitting on the national average at $3.95. And if you haven't noticed, it might be a little bit hard to see, so I'll just zoom in a little bit here. The chart doesn't let me zoom in, so I'll have to. I'm not sure if you guys can see that actually. I'm gonna zoom out. There we go. Let's do it like this. August to August data is $4.08 to $3.95. Next month that inverts, because September of 2022, gasoline dropped down to $3.81. September of 2023, we're likely to see it breaching $4 again. So now, instead of seeing deflation, which we saw in last month's print, next month's print, just 60 days apart, we're going to go from 20% deflation to probably somewhere around 10% inflation. That is a total of a 30% change on one of the key metrics that makes up CPI. If you look at an economy, you can learn about this in Guns, Germs, and Steel. There are a few raw resources that make up a modern economy: steel, coal, oil, and food. Those are the four major things that make up a modern, mechanized economy, and that's what every economy that is anywhere close to successful is run on. Let me just show you a visual of all raw resources in world. Let me see if I can find a good visual here. I've seen these infographics before. Let's see. I think Visual Capitalist has a good thing on this. They normally do. Here we go. So, here, check this out. This will show you, this is over on Visual Capitalist, this shows you how much of the different materials, all the materials and minerals in the world go into our modern economy. You've got diamond, you've got very, very, very few diamonds, for example, palladium, platinum, germanium. These are all much more rare metals and minerals. And then you get down here and there's a lot of copper, there's a lot of feldspar, magnesium, peat, potash, chromium, soda ash, clays, aluminum. Then you get down here and you look at iron ore. Iron ore, right here, compared to, for example, something like nickel or garnet or graphite. Then you scroll down and you see iron and steel. This is 3.2 billion tons. Cement, 4.1 billion tons. There's so much cement in the world, it's ridiculous. And if you were to look at a similar one, I'm sure I can find a visual capitalist of all raw resources, petro. Let me see if they have one for petrochemicals. I'll have to look into that more. But there are visuals, if you look them up, of how much oil has been drilled in the world. It is an exorbitant amount. If you look at all the raw resources visually, you can look at the numbers too, but if you look at it visually, it's striking. The four main raw resources that go into a modern economy are iron, and I'm talking about resources that you have to mine out of the ground. I'm not talking about sand here, that does go into cement. You're talking about iron, coal, oil, and food. Right up there, outside of the top four or so, you're also going to be looking at, like I said, sand, because that goes into cement. We have a ridiculous amount of cement. You're also looking at things like natural gas right behind petrochemicals. But those are four of the largest, most important commodities in our modern world, which is why when you look at the calculation of CPI, you end up seeing that gasoline prices are so important. And if you'll remember last month's print, this actually was not as drastic as I thought it would be. Last month's print, gasoline was at negative 19.9. Now it's at negative 3.3 because of this chart I showed you. At the same time, fuel oil came down from, I want to say it was 26.6 down to 14.8. So that's a 12-point drop there. Gasoline and fuel oil are both reversing massively. Massively. Natural gas pipe is still sitting right around where it was. It hasn't moved quite as much. But the petrochemical sector has absolutely inverted on its head. It's not going through deflation anymore. It's going through inflation. There was originally a massive crash here, a massive run up here just after the just after the war in Ukraine when Russia invaded Ukraine. Of course, they invaded Ukraine. What was it? February 19th, I want to say. I should know this. February of 2022. Russia invaded Ukraine. Gasoline shot through the sky because there was not as much production. Russian crude went offline overnight from a trade standpoint. And so from there, we saw the frackers, the people that work in shale, go crazy. And you saw the equivalent of a bunch of little mom and pop oil producers producing a lot of oil in the United States. Oil production in the United States skyrocketed, and so that brought prices down. But with that coming down, all of a sudden, the oil and gas companies realized, wait a minute, we can make more money like this. People actually bought our gasoline at $5 a gallon, which means you're going to go back there. We're going back to $5 a gallon, and that's something that's very sad to say because gasoline makes up already too large of the Americans' budget. But the point here is this trend is not ending anytime soon. Energy is about to go inflationary in a massive way. Negative 3.3%, again, one of the biggest drivers of this CPI print right now, is about to go positive in a major way. When you look at January or December to December's data, this December, national prices of gasoline are probably going to be averaging $4.20, if not $4.30. That will be 25% inflation. Within the next 2 to 3 months, you will see this number go from negative 3.3, which, by the way, last month was at negative 19.9 and was bringing inflation down. It is about to head all the way up to 20% if trends continue, and it seems that they certainly will. It's not very often that you get what amounts to basically a guarantee in technical or fundamental analysis or data analysis, but that's pretty much what we're looking at right now. We're almost looking at a guarantee that CPI is going to continue moving higher. And I want to connect that into how that plays into the how that plays into the Bitcoin market, because there is a very particular way that it does. And I want to explain this in a video a little bit later. I might make a phone video on this. But quite simply, it plays out like this. You would think that when CPI goes up, that would lead to people wanting to invest in Bitcoin because Bitcoin is a hedge against inflation. That is the traditional thought process, and you might be thinking that's why Bitcoin didn't dump as we expected it might, which, by the way, we'll get to the chart in a minute. This is encouraging. However, the reason why I don't think this is actually bullish for Bitcoin is because people don't so much invest in Bitcoin, at least the people that were trying to get into the market to start the next bull market. Those people don't necessarily look at Bitcoin as a hedge against inflation. They do, but they see it more of that's the value proposition, but what it actually is a tech stock. And so you invest in more risky tech stocks when the overall market is healthy and churning right along. The market does not like this CPI print at all. If you look at the chart here, the SPY has dropped just a little bit, but it probably will continue. I wouldn't be surprised to see a larger drop here on the SPY. And the reason for that is that when CPI goes up, that leads the Fed to be more hawkish or at least leave rates up at 5.25 where they are right now for longer, which slows down the growth of the United States economy, which slows down the growth of the stock market. And the stock market is one of the major correlative factors that drives Bitcoin to the upside. When we see the stock market going through a major rally, that is when we see Bitcoin going through a major rally. And so we need to watch out for Bitcoin and for the stock market moving very closely in hand. And if we are seeing CPI not only creeping up as it has so far, we dropped down to 3 originally, now we're back up at 3.7. What you're probably going to see happen is that the FOMC is likely going to continue hiking rates. CMEgroup.com here says that there is a 97% chance of a Fed rate pause at 5.25 once again. And that may be possible, that may happen, but I think it unlikely that we don't see at least one more rate hike, especially considering Jerome Powell's rhetoric at Jackson Hole. We talked about Jackson Hole. It was up on Friday, 3 weeks ago, I want to say it is now. And at Jackson Hole, one of the most important economic symposiums on the planet, Federal Reserve Chairman Jerome Powell talked about used very similar language that he's used in some of the Fed press releases lately of we are not guaranteeing rate hikes, but we are waiting on more incoming data. Well, the Fed has just gotten more data. Inflation just hiked by 0.5%. The purpose of the Fed hiking rates is to get inflation under control. That is a primary objective. They know that it's going to hurt unemployment. Unemployment is doing fine, so they're not worried about that. With unemployment doing well from the Fed's perspective, even if there's quite a lot of underemployment, that being people that have a PhD in astrophysics working at McDonald's, or somebody having a master's degree and 20 years experience in engineering, serving tables at, I don't know, almost said Barnes and Noble, doing a job that they're overqualified for. Nothing against those jobs. I'm just saying that that's what underemployment is. That is a factor. But what the Fed's looking at is unemployment, and people do have jobs right now. And so they have the, if you will, the freedom of spirit to go ahead and hike rates more, to utilize that to slow down inflation. And to be honest with you, you almost, in a way, kind of want to get on their side about that. Not really, because rate hikes kind of suck, but think about it. If we're trying to live a life where we're low on debt, and we're also trying to live a life of lower inflation, then a Fed rate hike, while it's bearish in the short term, is actually kind of an interesting idea. Because if it actually does, and this is all in theory, this has never actually been proven, but if it does actually slow down gasoline price hikes, then that's something that we could probably get behind, right? We'd love to see gasoline prices slow down. And I'm also all for businesses learning to operate without debt so that the effective federal funds rate doesn't really affect them. That's a good thing. All right, so how does the thesis work then? The majority of the market does work on debt. The majority of the market does take out debt to increase the size of their business, to grow their businesses, to grow their net worth. And doing that means that you have to have a basis of the effective federal funds rate, because the effective federal funds rate impacts overnight bank transfers between central banks and the Federal Reserve. That's in other words, in English, because whenever people say that always confuses me. But here's what it means. When the Fed loans a bank money, that's the rate they charge. Basically, that's essentially what it means. When the Fed loans a bank money, because remember, they're the lender of last resort. If a bank needs money, they don't go borrow money from a bigger bank. Sometimes they do. There is interbank commerce like that. But a lot of times, they will borrow from the Federal Reserve. The Federal Reserve sets their own interest rate. And when they set their own interest rate, that is what's known as a base rate. And everybody else bases their rate off of that, because that's how much money they're having to spend to get their loan. So the bank that you got a car loan from is borrowing money from the Fed. And so at the end of the chain, the Fed is the one loaning money to everybody. If you're in debt, eventually you can trace it back to the Fed. So you can all go blame Jerome Powell. I'm kidding. So the Federal Reserve, the effective federal funds rate is very important because it is the base rate for the entire market. So if interest rates are going up, that means that the cost of money is higher. I know that sounds weird, the cost of money, but literally the cost of money, the cost of borrowing money goes up. That slows down the growth of the economy. That slowing of the growth of the economy can hit unemployment, although it hasn't. The effective federal funds rate being this high does not seem to have impacted unemployment much at all. And so the Fed, like I said, will probably feel like they have more freedom to go farther with interest rate hikes. All of that to say, we're likely to see more inflation coming in. We're likely to go over 4%. And I'm also expecting that the effective federal funds rate is going to end up hiking farther. If you guys are enjoying today's stream, make sure to hit that like button and subscribe to the channel. If you have not already, make sure to go ahead and sign up for Lux Algo as well, because it is an incredible technical indicator, and we're going to use it here in just a little bit. Benjamin Lovejoy said, Jeb, Boston in the house, and we need a shout out, please. Patriots gonna dominate the gridiron this year. We'll see. We shall see. Peter P said, rate hikes till 2024. Lyndon Juden Kelly said, good morning at Crypto Jeb and fam. Good morning to you, my friend. Good morning and welcome to the stream. Jordan McTavish. Got some new names in chat today. Good to see you guys. USA to lose their reserve currency staying down this course of rate hikes. I highly doubt it. I highly doubt it, with all due respect, Jordan. In the 70s and 80s, we saw interest rates at 20. The United States became even stronger as a world reserve currency over time. I think it's very, very, very unlikely that's going to happen, because there is so much commerce that is transacted in the United States dollar that we have seen. Let me find a chart here for you. Percentage of world reserve currency dollar. That's an interesting concept. People have been saying it's going to lose reserve currency for a long time, and eventually it probably will. Eventually, it probably will. Whether that's coming this decade or not is yet to be seen. I kind of doubt it. But here, Wikipedia actually seems to have a chart here that might be helpful. Trying to find a distribution of gold reserves. Here we go. So it's just a kind of a quick chart. This is the first thing I found off the top of my head. Here you go. So here are the distribution of global reserve currencies going up to about 2017. You can see the United States dollar kind of comes and goes somewhere between 58 and 60 to 70, 65 to 70%. Of course, you had the Deutschmark coming in there, but it eventually joined in with the euro, so it disappeared, and so too the franc. You have the other currencies. You have the pound sterling and the Japanese yen. There are not a lot of other currencies that have anywhere close to world reserve currency status. It's not even close. The only contender, and I do mean the only contender, is the euro. No one wants to use the euro as their reserve currency, other than Europe. And a big part of the reason for that is geopolitical. A large part of the reason of that has to do with commodities. A large part of the reason for that has to do with the population. The Eurozone is going through a lot of challenges right now that the United States is not, or at least not to the same degree. The Eurozone is going through a colossal demographic crisis, such to the point that the French President Macron had to force through a bill raising the retirement age by 2 years, and I believe it went from like 61 to 63. I mean, it's like really young. Let me just check that. I believe it was 60. It went from 62 to 64. This is in April. Emmanuel Macron's unpopular plan to raise France's retirement plan from 62 to 64 was enacted into law Saturday. There were riots about this. 62 to 64. Look, I get it. You got all the old dudes out there waving their baguettes like, no, I want to retire. I get it. I understand you want to retire, but let's look at the demographic pyramid. I'm off topic, I know, but this is interesting to me. This is the demographic period of France. This is awful. This is terrible. Look at how much of the population is over 64. You can't sustain an economy when you have over half of the population not in the workforce because they're too young or too old, especially if that's skewed towards the side of being too old to work. So it kind of makes sense, you know. I'm not French. I didn't vote for the bill. I don't live there. I've never been to France. I'd love to go to Paris one day. But the whole Eurozone is going through that. Some countries much worse off than France. That's just one of the concerns that France has. That the Eurozone has are demographic crisis. They're aging so fast, they're getting into inverted pyramid territory, which is basically where Japan's been for 30 years. That's why you see so many robots and stuff in Japan, because they don't have enough people to do everything that needs to get done. They don't have the production to do it. That's one concern. There's also the concern of Russia knocking on the door. If Russia wins the war in Ukraine, they're knocking on NATO's door, and Europe's got to deal with that. Europe also gets a lot of its commodities from Russia, and Russia's not really a valid trading partner anymore, so Eurozone's industry is capitulating. Many of their major industries, especially the ones dealing directly with raw resources, I'm talking petrochemical and metals, they're moving to America because America's more stable. We've got tons of raw resources, and we'll trade with everybody. Nobody's going to embargo the United States. They're crazy to do that. So the only real contender for world reserve currency status that could flip the dollar would be the euro. And euro does not have a chance. And don't even get me started about the Chinese. Don't even get you. Please, if you want to hear about Bitcoin, don't get me started on the Chinese. I'll spend the next 20 minutes decimating the argument that the Japanese are going to take over the United States dollar as world reserve currency status. It's not going to happen. It's not going to happen. So, could we lose world reserve currency status? Maybe one day. Is it going to happen because of a year of rate hikes? I don't think so. What are your thoughts on the Brics nations coming off the US dollar? Brazil, Russia, India, China, and South Africa. Let's break them down one at a time. Great questions, Jordan. And by the way, all of this does tie into Bitcoin. You might be thinking, oh, Jeb's off on a tangent. I'm tuning out. No, this is actually relevant. And I'll tie it all in. Brazil is a very rapidly growing nation. They're probably one of the most stable nations in Brics. And that's saying something because Brazil is not exactly what you would think of as stable. Russia. Russia has become the pariah state of the world. The only people that they can get to trade with them are Iran and North Korea, and kind of the Chinese, but the Chinese don't like them. Why? Because those are the other two pariah states of the world. That's not a very large trading bloc. Oh, and Belarus. But Belarus might as well be part of Russia. Lukashenko's a dictator. India, very rapidly growing economy, a lot of political and infrastructural issues. It will continue to be a large player, but it's never going to be a China. China is unraveling at the seams right now. It has been for the last 5 to 10 years, but it's accelerating rapidly, right alongside the deterioration of Xi Jinping's health. South Africa. South Africa is not a very large country. It's just not a heavy hitter on the global stage. Those 5 nations, first of all, are probably not going to completely discontinue usage of the United States dollar. Do you really think all 5 of those nations, with all 5 of them, one of their largest trading partners, maybe other than Russia, being the United States, they're not going to transact in the United States dollar at all? That's what a world reserve currency status is. It's the world reserve currency is. It's one, the currency that nations hold, but two, it's also the currency that international trade happens in. They're going to continue to transact in the dollar because they're going to get better deals from people offering to sell or buy things in dollars. They're not going to completely embargo the United States dollar. It's not going to happen because you can't afford to do that. All of those nations, Russia, Brazil, India, China, and South Africa, all 5 of them are as large of economies as they are right now because of the United States guaranteeing, and I'm starting to sound like I'm looking at this from a patriotic lens, and that's not even what I'm trying to do. I am an American. I love my country. It's not a perfect country, but I do love my country. I'm not even trying to look at it from that standpoint. I'm just saying facts here. The United States has guaranteed free trade on the high seas for the last 75 years, and that's the reason that all 5 of those nations are even able to be anywhere near as successful as they are. Russia makes its money from exporting crude and natural gas in LNG containers and crude oil takers on the ocean. The Chinese, same thing. Indians, largely the same thing. Brazil, same thing. South Africa, from a trade standpoint, might as well be on another planet. Same thing. They have to transact over the maritime trade. If they don't do business with the United States at all, what's the trade incentive for the United States to protect their waters? Just saying. Or any of the other waters that they may be transacting in. Anyway, said Chinese. I say Japanese. I meant to say Chinese. I apologize. All right. It's absolutely possible for them to go off of the United States dollar. I don't think they're going to stay off the United States dollar, and they're not strong enough, even as a block of 5 nations, to impact to flip the United States dollar. It's just not. And also, which one of their national currencies is going to become the world reserve currency? Even if they make another currency, if one pulls out, well, great. You just lost one of the legs. I don't see it happening. All right, so how does all of that tie in? Let me see if I can just expertly craft together a narrative based on what I plan to talk about and also what we just talked about with the currencies. So the Fed is attempting to combat combat inflation, and also position the United States dollar as one of the strongest currencies on the planet, continue to position it as the strongest currency on the planet, and allow it to gain in strength, that it may be used as an economic weapon against the Russians in the war with Ukraine. The United States have been throwing munitions and arms that were slated for destruction anyway at the Ukrainians, much to the chagrin of the Russians, and they have just thrown hundreds of thousands of tons of equipment straight into the teeth of the bear. Well, now the teeth of the bear are starting to get dull, and the Russians are being put behind decades on military development. It will take them 20 years, if not 30 or 40 years, to rebuild the amount of military losses that they've already incurred. Russia is done as a modern military, which obviously, other than the first 2 weeks of the war, they don't seem to be one anyway. The United States has gotten a massive return on investment for that. Russia is one of the only major threats that the United States has ever faced. We've been threatened with oblivion by the British. We've been threatened with oblivion by Russia and by, maybe you could say, Germany, if they ever got the bomb, but really not. We never were really threatened with oblivion by Germany in the Second World War. Russia and Britain are 2 of the only real nations that have ever threatened the United States with oblivion. The British, because they, we could have lost the war, never existed. And then the War of 1812, they almost won. The Russians, because they've got the bomb. And they've been very, very vocal about threatening us with it for 70 years. It is in a nation's best interest, obviously, to eliminate threats to its national security. If the United States is able to use its currency and military hardware that was already slated for destruction anyway to break the back of one of its major enemies, then it's going to do that. And the Fed is on board with that. They want to have a very strong currency that the United States Congress and President can use as an economic weapon against Russia. If you embargo Russia with the United States dollar, which has happened, You don't just embargo them from your nation. You embargo them from using that dollar. So if somebody in France wants to trade with Russia and they use the dollar, the person in France is in trouble. So not only are you embargoing Russia with the United States economy, which makes up a quarter of global GDP, you're also embargoing them with 60% of the world reserve currencies, which is why Russia's going in the direction of trying to do things with Brics and trying to do things with Iran and North Korea. We're best friends with Britain now, exactly, just like Iggy said. So there's only one of those countries that is even a threat at all anymore to the United States. It's not even close. The United States has, if this was a civilization game, the United States has won the game, and they clicked keep on playing. That's what's happened right now. It's just where it is. That's where we've been ever since the Soviet Union fell. Now, again, if any of you guys drop a 1 in chat if you know about the Civilization 5-6 game. This is like 1991. The wall came down, the Soviet Union collapsed, and then the United States won the game. And then they hit keep on playing. And now we're in that era after you press keep on playing, just seeing what happens. So again, how does this all tie in? The Fed wants to maintain a strong currency so that they can use that currency, so the Congress and the presidency can use that currency as an economic weapon against the Russians. It's a matter of national security, and it is. Look, I mean, you got 15,000 nukes, you're going to point them at us, duh. Like, of course it's a threat, right? Okay. At the same time, they also want to get inflation under control for the stability of the United States economy, for the good of the people, hopefully, theoretically. We don't know what's going on in Jerome Powell's head, but that's what's said anyway, for the good of the American people, to get inflation under control, which is a good thing to have inflation under control. So we're not opposed to that. We can align on that. And for the betterment of the nation as a whole. All of that means that if inflation is going up, and if the strength of the United States dollar is in peril, which is not, the Dixie is increasing and will probably continue to increase here. You can see that right here. Then we are going to see potentially more rate hikes. All of those factors come into this number. Are we going to see more rate hikes? CME Group doesn't seem to think so. CME Group is a massive, massive organization. Then on the Chicago Mercantile Exchange, if you haven't heard, there's something called Bitcoin futures. Those exist on CME, so we do need to take that seriously. That being said, I'm not sure I totally agree with the idea that the Fed is not going to hike rates anymore. I'd honestly be surprised if we didn't see rates hit 6% in light of inflation going all the way up to probably 4.3 to 4.4. Food and all items less food and energy are currently at 4.4. These are drops, so that's good. That's good, and that could counteract what we're talking about here. But right now, we're going to see energy go massively high. We're probably going to see it go to 15%. Well, at least 10%, because natural gas and fuel oil are still down, but probably at least 5 to 10%. That's going to drag all items up. Core inflation over here has continued to drop. That's a good thing. That's what the Fed's looking at as well. But food and energy are skewing the picture at 3.7. Energy goes up. That's going to cause the Fed to hike rates. More than likely. They're already at 5.25. They want to get rates up to above inflation, then bring them down together. Well, if inflation's going up, that's the wrong direction. That's going to lead the Fed to more than likely wanting to get ahead of it, or at least leaving rates higher longer. There are two scenarios. Either one, the Fed hikes rates more, or two, the Fed just leaves rates this high and pauses them for 6 to 12 months longer than they planned on. And that's not exactly the best thing for the United States, for the Bitcoin market, because Bitcoin wants those rates to drop because that's going to cause a massive catalyst. Now, let's talk about the chart. Part of the reason I left the chart so long to discuss is because Bitcoin didn't really do anything. I gave you a couple of trade setups, shorter-term trade setups here. You can see this short trade right here. We got into this short trade. This was a 1.54% profit potential. You can see the market. What you would have, I think you would have made some money in this relatively quickly using a 0.1% stop loss. Okay, we dropped 0.54% after we fall into this level. Come right here to 0.35. Boom, you made your money. Great. So you made 3.5%. If you traded it again, which you could have ended up making about another 0.3%. We came down here again. You probably would have gotten stopped out. If you chose to get stopped out, that's great. If you chose to stay in it and do it a second time, you could have made another 1%. So this trade here could have made you about 1 to 2%, depending on how well you managed to trade it. Because there is a certain degree of manual. You do have to be manual with it. Now, up here, we didn't enter this long. Now, again, these were just kind of dummy numbers. But this long, actually, wait a minute. Did I set that long there? That's right below resistance. Did I do that? I did not mean to do that. Let's look at this. I think I may have put this on the wrong spot. Nevertheless, we'll see how it played out. Let's see. 1 hour chart. I sure did, didn't I? Yesterday, I put that at the wrong spot. All right, where I meant to put that, I apologize. I meant to put that entry above that resistance, and so you'll see why that's so important. You can see, I must have just not caught that. You can see we normally put our entry above the resistance up here, so we wouldn't have gotten entered. Nevertheless, it looks like I misclicked yesterday. It's not what I meant to do because this is a principle we have. We put it above the resistance, not below. Apparently, I put it right here. You can see this is why you don't put the entry below the resistance, because if you did this, like I did, I misclicked and put that there, then you would have entered into it, and you would have made 0.4, then you would have gone down to negative 0.6. That's a 0.1% stop loss. You would have lost 0.6%. 0.06%, I'm sorry, not 0.6. That's why you put the entry above the resistance. There we go, Jeb. You can remember how to do things. There we go. Perfect. So that was the resistance that we had there. So that trade would have never gotten triggered if we had actually set it where I meant to set it. I must have just not seen that correctly. But even if you did get into that, you lose 0.06%. Down here on the shorts, you make like 2%. So that's how the trading strategy works. It's not too complicated. Where does Bitcoin go from here? Well, again, it's very encouraging for the price that Bitcoin did not crash. We were expecting a larger drop when CPI came back at 0.5%. With Bitcoin not crashing here, and with CME Group predicting no rate hike, these could be two very bullish events for Bitcoin. They may not lead to rallies right now, but you can think about it a little bit like this. These events are almost the same thing as saying, no bad news is good news. These are events where we were expecting they would probably end up being bearish, and they weren't, at least not that significantly. It's possible the market just hasn't priced them in yet, but they haven't significantly impacted the market yet. Bitcoin seems to still be in a holding pattern, and it managed to walk right through that. So that's very, very exciting. That's very exciting. All right. Let's go ahead and read chat here. The dollar kept those countries poor. Jeb is wrong. There are plenty of how shall I say this? There are a lot of losers of globalization. That's absolutely true. There are losers of globalization on the home front and on the international front. Whether it's a good thing or not is a political conversation that I don't care to get into. Are there people that have been disenfranchised by the modern American empire? Absolutely. Absolutely. And do those people have a right to want to try and do something different if the system that they're in is not working for them? Totally. I think that I'll leave it at that. So as far as if the dollar kept those countries poor, yeah. The dollar has not helped a lot of countries. Let's not forget, we're a Bitcoin channel. We're a cryptocurrency channel. I'm not the greatest fan of the dollar. Bitcoin is what we're here for. What I'm saying is that the dollar is the strongest. I'm not trying to give it a moral stance. What I do mean to say is that it's probably not going anywhere as a world reserve currency, like it or not. As far as Brics having 15 or 20 other countries that have signed up for it, yeah, that's true. And it is growing. And we'll see how it goes. Mexico's largest trade partner is the United States. They're not going to ditch the dollar. If they did, they'd ditch their economy, and they go back 100 years in development. Mexico ditching the dollar is about as laughable as the United States ditching the dollar. Mexico's not going to ditch the dollar. It's not going to happen. France, one of their largest trading partners, as well as the United States. France is also made up of the euro. So France is a major trading partner and ally with the United States while transacting in the euro, but also wanting to get involved with Brics and potentially overthrow the current world order, throwing out the euro and the dollar. That just sounds a little bit strange to me. I'm not saying they're not in it. I know that, but I am saying that it's difficult to kind of figure out how France is going to get on one track with that. Good deal. So Dixie at 104, bearish. Yes, the Dixie. So the thing about the Dixie, it's more the trend of the Dixie that matters. Not so much where Dixie is. It's whether Dixie's currently going up or down. Right now, Dixie's going sideways. It's probably one of the reasons why Bitcoin's managed to hold. It has been sideways for the last week. The trend is overall up, but the last week we've been down. Let's keep that in mind. At the same time, something I want to mention here, August the 28th, when Bitcoin went through a rally here, if you look at Dixie, and August 29th, those were the exact days that Dixie was dropping. So let's not forget the comparison here between the Dixie and Bitcoin. We saw that spike on Bitcoin with Grayscale, but it also happened on the same day that Dixie had a drop. We're also seeing that Bitcoin's going through small rally right now, that's also corresponding with a little drop on Dixie. Major correlation there. Huge correlation. And so that's definitely something that we want to pay attention to. All right, let's read some chat. Really appreciate all of you guys tuning in. We've got over 350 people watching today. Thank you guys so much. If you're enjoying today's stream, make sure to hit that like button and subscribe to the channel for more content. If the dollar dies, what will back up Bitcoin? Dollar's not going to die, at least not anytime soon. And let's see. If the dollar dies, we'll be back up. Yeah, Bitcoin is not backed by the dollar. So that's not really a concern in the first place. Bitcoin is backed by its own scarcity and by the value that its investors place upon it. Let's see. Read some chat. Somebody, Crypto Savvy is predicting $10,000 Bitcoin. I doubt it. It's possible, but I kind of doubt it. He is an American, so he will be biased. That's true. I am an American, and so I am biased. That's true. But like I said, I'm not trying to say that the dollar has been good for everybody, because it certainly hasn't. Nothing made of man will ever be good for every person. You can guarantee that. You can guarantee that. All right. Good deal. Shout out from Toronto, Canada. Lyndon Juden Kelly said. Shout out to Toronto. Thank you. Thank you for being here. Eric Hardcastle said, I've been screaming this for weeks. Good deal. Awesome. Everybody's excited to be back in studio. Jeb, appreciate you being honest about global disenfranchisement. It's sadly a part of our current situation, but most won't even recognize it. Oh, it's absolutely a factor. I have this issue in my personal life sometimes where I take stances that I have for granted and I don't say them, and then people think I believe the opposite of what I think. I don't know. Has that ever happened to you? Like, if I didn't say that, some of you might think, oh, well, Jeb thinks the dollar's been good for everybody. What about these people? No, I don't think the dollar's been good for everybody. That's like one of those things that's a duh in my head, but I have to kind of watch myself as a public figure, and even in my personal life, some of the things that are duh, I need to say, because otherwise people are sometimes going to assume that I believe the exact opposite of what I believe. I mean, like when I started the channel, I would tell people like, man, we're able to make so much money. I'm so excited. And in cryptocurrency. And then people just assumed I was being this jerk and all I cared about was Lambo. I'm like, guys, I thought it was a given. I want to be able to make money so I can help people. Duh. I didn't say that because I didn't want to be braggadocious. But one of my former employees, still a good friend of mine, Shannon, one day pulled me aside. He's like, Jeb, you should probably say that more. It's like, but Shannon, I don't want to sit here and brag and act like I'm virtue signaling or goody two-shoes or anything. You know? Anyway. Good deal. Third quarter is going to be rough this year. So many events happening soon. October 1st, student loan forgiveness ends. That's $300 out of American pockets. Most people are living paycheck to paycheck. Yeah, for sure. Look, America's got to get out of debt and learn how to make a lot more money. That's what I want to help you do. I want to help you figure out how to make a lot more money. If we get out of debt stuff, you can go somewhere else and figure that out. I can talk about it a little bit, but I'm going to help you make a lot of money so that you can do good things with it. That's the goal. All right, guys. Well, that's going to wrap it out for today's episode of Coffee and Crypto. I do hope you did enjoy. If you did, make sure to hit that like button and subscribe to the channel because more content is coming. Make sure if you have not already to sign up for Lux Algo, you can use coupon code JEB30. That's JEBB30 for 30% off at checkout. And don't forget about Club DeFi. Club DeFi is the place where we have taught you everything that you need to know about technical analysis so that you can hit the ground running in the cryptocurrency markets. And by going through Club DeFi's principles of technical analysis, you are going to be in great shape to prepare for the coming bull market. Because when the bull market comes, you're going to be able to make quite a lot of money in it. And I want you guys to be in a position to be ready for that. Like I said, make sure to check out Lux Algo and Club DeFi with the links in the description box down below. That's a great technical indicator, Lux Algo. Club DeFi is a place that we teach you everything about technical analysis. Before I go, I do just first want to thank each and every single last one of you from the bottom of my heart for watching, as always. And I will see you guys in the next video. Peace.
Oh, I got a real good feeling. Got a